This episode is brought to you by the Chronicle protocol, a cost-efficient, transparent, and decentralized oracle. Chronicle has developed a next-generation oracle primitive called Scribe, which reduces oracle gas fees on L1s and L2s by over 60%. You'll hear more about Chronicle later in the show. The product you already know and love just got even better. If you are stressed about managing your on-chain portfolio across different wallets and different chains, I'm super excited to tell you about MetaMask Portfolio, which lets you manage all of your crypto across networks and wallets in one place. Do more in Web3 your way with the MetaMask Portfolio Manager. You will hear more about them later in the show. All right, everyone. Welcome back to another Roundup. Recording this Thursday afternoon. Santi, how we doing, man?
Doing great. We missed you last week. We had Casey on talk about the, everything.
I didn't know if I was going to get the look back. I didn't. People, a lot of folks were joking. I was not going to get the invite back, and it seemed kind of real. So,
a lot of people seem to like that. For me, it was eye opening because I had, no idea what goes on to these things, and so it was very eye opening. Really fascinating stuff that's transpired. Since, of course, we had like key witnesses, we're going to talk about a little bit of that. Hopefully, we have Casey on, maybe next week to give us a more of an update. But I'm doing great. I think, look, a lot of stuff is going on in the world, and it's one of those things where, like, I always tell my parents. I remember once I was like, look, if my emotional state was directly impacted by the price of crypto, I'd be a wreck. Like, I would have already died of a heart attack. And so I think one of the things that I've learned in crypto is to kind of shield what happens in the crypto world, in the volatility and everything. Like, separating like your work environment from your house environment is critical. And like that sometimes has been challenging for people, especially as you work from home. But nonetheless, like, look, I think one of the things that is important is just maintaining a level of optimism and just because I think like Twitter and the news inherently like skews negative and portraying a lot of the bad things. And I always like to remind myself and going back to like, there's this great like book and video as well, like YouTube on Hans Rosling, who is a data scientist, German data scientist, I believe, passed away, but he has a great book about just talking about quantitatively, like the world has become a better place. It is a better place today than it was like 100 years ago, like in terms of conflict, in terms of poverty, like across the board. But I think like because we're so connected 24/7, 365, and these news and the algorithms just want to feed us stuff that skews like attention seeking stuff and headline seeking stuff. We see this a lot in crypto, but we're seeing it a lot in like geopolitics and whatnot. But I it's important to like zoom out and just like, be grateful, but also just keep your head cool in many ways. So so long-winded way of saying I'm doing okay, doing great, a lot of things to talk about. So how are you doing?
I'm doing all right. It's been a shit show of a week. I was actually debating, and I said I wasn't sure if I wanted to bring up everything that's going on in Israel, but there is one thing I wanted to call out, which is there's actually I don't really have anything to say that's outside of what everyone else is saying on Twitter and stuff, but there is actually just one resource I want to call out that's very relevant to a lot of companies actually in crypto. So there's a lot of Israeli founders in crypto, and before founding Blockworks, I worked at an Israeli tech startup called Sisense, and a lot of people who work at these companies with oftentimes Israeli founders, a lot of the employees are in the reserves, and a lot of folks are getting called up to the reserves right now. So there's actually this resource doc that this couple, Zoe and Michael Burian, put together, where if let's say there's a company, I think Chaos Labs might be one of these companies, like half their employees or a good chunk of their employees, I don't know the exact numbers, or I saw the CEO of Digital Asset, Yuval, is going to Israel. If you have a lot of employees in the reserves, that means half your staff is gone and not working. So Zoe and Michael put together this resource request form where you can actually put in, like, I'm a data analyst, or I'm a salesperson, I'm willing to allocate 5 hours of my week to stepping in to basically like fill the time gap for these folks in the reserve. So we'll put a link in the show notes to that. I think I know a lot of crypto companies who have been impacted, who have a lot of employees who are going to the reserves right now. So that's who are getting called up. So we'll put a link in the show notes for kind of the volunteer talent form.
Yeah, that's great. I mean, needless to say, I'm an investor in Chaos Labs. I'm an investor in at least I think 6 or 7 of my portfolio companies are either directly based in Israel or half the team, because the founders are from Israel. It's a thriving ecosystem, cybersecurity wise. Like a lot of the former intelligence unit, like really a lot of talent is there, and so obviously difficult times. So yeah, that's great research. Definitely check it out if you guys are interested.
All right, a couple things to talk about this week. We had SBF Trial. I think we should start there. I actually texted Casey to see if she wanted to come on this week again, but no response.
She's still there
because you remember you have to lock your phone up in the courthouse. So
that's right.
No, Casey. We'll try to do our best summary. But it's funny. Right after you guys recorded, we got a bunch of messages. The Empire podcast, this podcast, was used as
evidence,
as a document. Yeah, as evidence. They actually played this clip of our podcast when I think this was before you were a co-host when we had Sam on the podcast.
Right.
So I was like, oh man, is that my living room? And
anyways, yeah, well, it's pretty interesting because Sam was doing a lot of the circuit, right? He was going around. I was in a lot of podcasts with him, and he was very critical of DeFi, and of course, I was on the other side and debating with him, DeFi, and so there's that's it's pretty interesting.
All right, so big thing from this week was Caroline Ellison, Tuesday and Wednesday. So maybe I'll do a little bit of a recap of Tuesday, get into Wednesday. We can talk through some of this stuff. So Tuesday, some of the highlights. Ellison said that she didn't really feel qualified to be Alameda's co-CEO, but it was no biggie. She reported to SBF. Her salary and compensation came out. She was making $200K a year, but had this nice $20 million annual bonus that came, at least in 2021. She said that SBF really pushed her and the team to borrow as much money as they could, which led to roughly $10 billion in outstanding third-party loans by the middle half of 2022. SBF told Caroline that political donations were a really good use of their money, and that relatively small amounts of money could be used for influence. So when we saw things like that, I think it's 5 or 10 million donated to now President Biden, this is, it's interesting to hear him talking to Caroline about this stuff kind of early on. We also learned that SBF believed that he had a 5% chance of becoming president. So
he wanted to buy Snapchat and also wanted to be president. I mean, the man wanted to do it all.
Okay. So this was, you mentioned Snapchat. So there's this list that was called Things SBF, really just Things Sam is freaking out about list. Here were the things that Sam was freaking out about. This is bulleted list: hedging, bad PR in the next 6 months, user experience broken down into sub-bullets, VIPs, API throughput, and click traders, front end being laggy. Another bullet: getting regulators to crack down on Binance, raising from MBS, getting capital from BlockFi, Alameda Modulo relationship. I don't know what Modulo is. Willie being happy. I don't know who Willie is. Insto stock onboarding, Reddit, buying Snap. I'm not sure if that's buying the stock Snap or buying the company.
I think he wanted to buy it. Like he wanted to buy out of Snap.
Trading JGBs. What is that? Japanese government bonds. I think the 10 years. Bad English language content and making bonus process better for next semester. So he's got some big things on his list here. If we start to look at, go ahead.
No, I was just say first and foremost hedging. Well, hedging. There's not a lot of that going on.
Yeah. Raising money. So
interesting
MBS,
here. There's nothing in this list that talks about security. And as we've learned, of course, like they just had terrible OPSEC. Like they just, and I think there's another tweet that we can link it in the show notes that talks about all the different hiccups that they had. Really just like negligent in terms of like running a secure infrastructure and managing keys that led to losses across like they were yield farming aggressively in like unvetted, unverified contract protocols. They lost a ton of money there. They then also had money frozen in China in a Chinese exchange, which we'll talk about that later. They also had, I believe that they were held hostage by like this other DeFi protocol that didn't want to release their funds, and then they lost a ton of funds there. Then, of course, like there was during the whole insolvency, process. I think the famous FTX hacker, which is apparently now linked to Russia, believes like hacked a bunch of ETH. Right, it was like in the order of like a couple hundred, like 100, 200 million or so. So, anyways, a lot of losses in their operations, which is crazy. So anyway.
Yeah, there was so the lead prosecutor, Danielle Sassoon, prompted Ellison to kind of elaborate on one of those losses. And she ended up talking about this $800 million loss that FTX sustained in 2021 while trading BTMX, which I don't know what that is. And they said that she said the massive loss was due to a margin system malfunction. And the kicker is that when this happened, SBF told Alameda, said that Alameda needed to take the loss because he didn't want it on FTX's balance sheet. So even back in 2021, he was kind of kicking these funds over. Other thing that I'm trying to kind of figure out and trying to trace this money, and I know some folks at Blockworks are looking into this, is there's this whole thing around Thai sex workers and bribes of Chinese government officials. So if you actually look at it sounds like SBF sent 100 million, between 100 to 150 million to different crypto addresses that they believe to be tied to Chinese officials with the hopes of gaining access to about $1 billion in Alameda funds that were frozen by Chinese government officials as part of this money laundering investigation. And the money was frozen on Huobi and I think OKX. So one of my questions becomes, is there still $1 billion of customer funds on OKX and Huobi? Are those still there? I'm not entirely sure.
Mm-hmm. I'm not sure either.
Yeah.
Yeah. Apparently, there was an employee at FTX that had her dad was a Chinese government official, and she warned them against not doing this, and then she got promptly fired. And they still went ahead and kind of, try to bribe him and send this money to various officials. I don't actually know the outcome of this, but of course it's pretty damning in terms of not only is this the Foreign Corrupt Practices Act, I believe, that is in violation of, and the implications are, people that are in this Signal chat are all implicated. Caroline, Sam, Ryan, Salame, and also Trabuco was on that thread. And so now he is implicated, and everyone is wondering, well, where the hell is Trabuco? And that's the biggest question in all of this is like, where is this guy? And at what point is he going to show up? And I got to think he's under witness protection or whatnot, but we haven't heard at all from him. And he's obviously a big player in all of this.
Yeah. There was one more key thing that Caroline talked about, which is that at one point in the summer of 2022, the Genesis requested a return of 500 million, right? Due to they started to get really concerned. And let me just I'll read the quote from the testimony. Ellison says, Genesis was getting recalls from retail lending platforms, so they asked us for 500 million. Other side says, what did the defendant tell you about his call with Matt Ballensweig of Genesis? Ellison says that Genesis might go under, so we should send it to them. Sassoon said, the prosecutor says, when you sent this balance sheet to Genesis, did you consider it to be dishonest? Ellison said yes. So this is interesting. I don't know. There were a lot of people asking FTX back for money, and they said no to a lot of people, but they said yes to Genesis. So it makes me wonder kind of like why that happened.
Yeah. Importantly, I think Sam made a statement in there that said he wanted to prioritize repaying Genesis and holding off on repaying BlockFi. We'll have to understand why that was and what his thinking was around there. That'll be good to know. And the other thing is, all of as I'm reading all of this, I was thinking about that scene. There's a great documentary of Madoff on Netflix. There was this particular guy that was a longtime investor in Madoff's funds that knew that Madoff was running a Ponzi. And instead of sounding the alarm, he tried to extort Madoff and wanted to get his money out before others. And so he went to Madoff and said, hey, I'll call you out. I'll rat you out. Or unless you just give me back my money and all the returns that are on paper. And then that came out during the whole investigation afterwards. And so in a similar manner, I got to think obviously CZ really tripped all of this out because he at some point realized, because, FTX was sending a bunch of money to Alameda. Alameda was then like doing this arb across exchanges, right? If there's a price delta between FTX and Binance, it would send. So they were like interacting with a lot of exchanges and counterparties. Maybe not a single counterparty was able to understand the entire flow of their operations. But I think there was a lot of people that were looking on chain at these wallets. I think at some point ZZ realized what was going on, and then he sold all his FTT. But it also raises the question, like, at what point did these counterparties, Genesis, BlockFi, Gemini, kind of knew that they were in a very precarious spot? Of course, they were getting fed these spreadsheets, which is part of the testimony of Caroline. These like fabricated spreadsheets that just had erroneous numbers on them, omitted numbers of loans, of a number like of positions and whatnot. And so at what point do you just not like, do you look at that and at what point did they realize that was the case? So, yeah, I mean, of course, this is something that if I'm the prosecutor, I would really want to go deep on, just understanding all the other different counterparties and their relationship. Maybe to salvage themselves, they didn't want to sound the alarm and they wanted to get the capital back. But when you have this priority, if you know you're insolvent and you prioritize one creditor over another, then you have to peel all that back, I think. Because in the Madoff case, Yana, you know this better probably than I do, but a lot of the people that got money ahead of others, like this priority, they had to give it back. Right. So anyways,
Exactly.
Just very interesting. I mean, is Caroline over? I think she's gonna, maybe there's another day or two, but she's been very revealing. I mean, we're just covering like probably scratching the surface. I mean, there's a ton of stuff. There's people that have done great threads documenting all the kind of the testimony, but just some really interesting tidbits here and there.
All right, let's move on to another piece of news. So, big BlackRock-Barclays trade on JPMorgan's blockchain system that they've kind of set up here. If you guys remember the episode we did with Tyron, he started talking about kind of hinting that something big was coming, and I think this might have been it. So, this was the first ever. The way I understand it is this is the first use of tokenized. So basically, BlackRock tokenized money market fund shares and sent those as collateral to Barclays. And basically to be used as derivatives margin. So they posted this tokenized MMF collateral for a live trade using the kind of new Onyx digital assets dApp called TCN. And so Tyron sent this to me. He's like, this is actually a really good use of blockchain. Like more people should talk about this. The kicker here is that something like this, using this kind of collateral to post would usually take at least a day. There's T plus one basically for this collateral to post. This collateral in this case took 1 second to post. So as Tyron put it, he said, we believe that ultra fast collateral will bring huge value to what is a $25 trillion collateral industry. So,
yeah. I mean, people complain on chain, right? When there's like high gas that you need to refill your collateral. But look, folks, I mean, yeah, of course, like the problem is on chain, you can get liquidated without notice. Like if you don't meet, that if your health factor drops below 1 and you don't want to pay the super high gas fees, like as we've seen in these like high vol environments, you get liquidated, right? But in the real world, like you still need to meet margin calls, and the settlement is just like super antiquated, like T plus, as you said, 1 or 2. And just having the ability to instantaneously meet your margin call by tokenizing this collateral, very liquid collateral in money market fund, is hugely valuable. Yeah. Both from like at one point, and I think in the episode, we wanted to dive deeper, and we're going to have him on again talking about this, is really quantifying the cost saves on just the record keeping of like just doing instantaneous like atomic settlement. I got to think that alone involves a pretty significant cost save on the operation side. People might be listening saying, okay, cool, a test. What's next? Like, how big can this get? How real is it going to be? Any sense of like what's next year? Like, is this going to now be the norm? Can everyone adopt this? is Goldman and other investment banks that are competitors to JPMorgan want to play ball in Onyx, or does this move to Ethereum?
Yeah, it's
I'm just kind of
interesting.
curious if you have an opinion on that.
So I think the kicker here is that it was BlackRock. That's what I would say is the most important part of this. Without saying too much, I do. So BlackRock has their Bitcoin ETF, right? BlackRock's now in the game, basically. And I think this is the first. I would call. There's kind of three elements when I think of a bank getting into crypto. There's like three elements. There's do you let your private clients hold Bitcoin? If you're a private client of Goldman or JP Morgan or someone like that, are you able to hold crypto, Bitcoin and ETH and things like that? Second is like, do you partake in the infrastructure play, basically, which is what JP Morgan's leading on here. The third one is, do you trade in it, and do you make markets and things like that? And right now, so a lot of people used to do the third one. Right now, Goldman is the only bulge bracket that is making markets in crypto. So Goldman's the only one who's doing that. Everyone else backed out. JP Morgan's kind of leading the way on the infrastructure side of things, and a lot of them still are not allowing their customers to hold crypto. Like if you're a private client of JP Morgan, you can't hold your Bitcoin with them yet, I would say. So what else we got? Layoffs?
Well, we have.
I don't really want to talk about layoffs. You had war. I feel like a lot of this stuff is depressing. You had layoffs at a couple of
I mean,
companies.
look,
You've
well,
got
we'll talk about it because putting emotions aside, I mean, we are seeing a bunch of layoffs at Yuga Labs, Ledger, Chain Analysis. Um, what's the other one that I'm blanking on here? Web3 Foundation,
Polkadot.
Polkadot. Yeah, they fired a bunch of their staff. Yeah, look, I mean, I think it's one of those things where people, are coming to the realization that they need to prioritize runway and surviving, and it's a tough fundraising environment out there. I do think that um, the good companies are still getting access to capital. It's very concentrated, very selective. These rounds are still happening, but yeah, certainly it's tough, right? I mean, what is still very shocking to me is how some teams were just able to blow through 15, 30 million in 1 year, even more.
Hmm.
My guys,
Yeah.
like they just threw bodies of problems, and the reality is like a lot of teams come to me and say, "Hey, we're going to raise another 5, 10 million because we want to hire head of marketing." And I'm like, "Are you there? Like, why are you gonna like? You don't even have a product. Like, why don't you just double down on the product?" So I think the here's my rubric: the really good teams are very technical, and it's really lean teams. Founders are very competent and technical. And I was just right before this podcast, I was late because I just got a demo from one of the teams that I was an investor in, and they've just been incredibly lean. They're very technical, and they don't have. It's just a very skeleton organization, like just bare bones, like just building the product. And they've identified a niche in the market, and they're going after it. And it's those are the teams that are getting funded, and they like on the other hand, there's just the majority, unfortunately, are those teams that just went out and said, I guess we have to bloat an organization because everyone needs to have a chief of staff and a head of marketing and
Hmm.
go on all these conferences. I'm like, well, wait on, like, hold on here, build a product, you know, find product market fit. So, yeah. And then the other, of course, is there's probably 80% of the companies that raise money just should just, uh, return it because they're just milking it at this point.
Yeah. So I think that what's happening with some of these layoffs is there are a lot of the later stage companies, right? Chainalysis, Ledger, Yuga Labs. They need big capital. They're raising maybe Series B, Series C, Series D. And what's happening is they're going to raise capital, and the VCs are saying, "Look, I actually like your company, but your burn is too high. So you need to first cut your burn, then we'll allocate." So I think that's where I think that's almost the why behind a lot of these layoffs is.
That could be true.
Yeah, and it's funny. I was looking at DeFi Llama's like raises tracker, shows you like how much venture money has gone into the space every month. The numbers are way off. The numbers are just wrong. And I think the reason for that is because a lot of companies are not announcing their raises right now. So if you raised at a 1.5, a year and a half ago. Now you need to raise again. You're raising it like a 500 now. You're down 66%. There's no way you're announcing a big down round. So you try to you do everything in your power to keep that fundraise quiet. This episode is brought to you by Chronicle Protocol, the best on-chain source for cost-efficient, verifiable data. For anyone who listens to Empire a lot, you know that we talk a lot about MakerDAO. Well, Chronicle Protocol is this novel Oracle solution that has exclusively secured over 10 billion in assets for Maker and its ecosystem since 2017. And for the first time ever, super excited to share here that Chronicle's Oracle service is now publicly available for anyone to use. Compared to using other Oracle services, Chronicle offers a 60% reduction in gas fees. They have an unparalleled level of transparency at Chronicle. They offer a dashboard that allows anyone to track the genesis and trajectory of the data it provides, marking this milestone in on-chain data availability. Chronicle is endorsed by a network of the most revered validators, including Etherscan, Infura, Gitcoin, DYDX, and MakerDAO. It is time for a paradigm shift in Oracle development, a future where data is verifiable, operational costs are contained, and the possibilities are immense. You can learn more about Chronicle at chroniclelabs.org. That is chroniclelabs.org. The product you already know and love and have probably used for years, MetaMask, just got even better. I want to tell you about MetaMask Portfolio. If you're like Santi and me, managing your crypto assets across a bunch of different wallets and networks can be overwhelming and it can be complicated. That's why I'm excited that MetaMask Portfolio has partnered with Empire. It's really easy to get started. Just connect your MetaMask wallet to get a bird's eye view of all your coins, tokens, and NFTs in one place. You can easily buy, sell, swap, bridge, and stake your crypto assets at competitive rates, all within the MetaMask app from a vetted list of providers. The MetaMask Portfolio lets you do more your way. Hit the link in the description of today's episode to get started. Let's take this into the USDR stablecoin. So there's something called Real USD, which is USDR. It's a stablecoin. It depegged this week. Price crashed by like 50%. It is a stablecoin that is backed by real estate assets, and it depegged. Price went down 50%. It was issued by this company or protocol Tangible DAO. It was small. It was a market cap of like 50 million before the price started spiraling. The asset was supposed to be, as they put it, I went to their website, new type of money backed by real estate, yields 8 to 15% a year. And it looks like they lost their peg due to this big rush of redemptions. But I mean, it was fairly small, 45 million, 50 million market cap. I'm honestly surprised stables like this are still around.
Yeah,
But
I mean, guys, again, the biggest problem here is there's a mismatch of assets and liabilities. Real estate, not very liquid.
It
Could be
it
sound
listed
collateral.
62,000 of the USD. I was looking at the collateral. There was 62 or 63,000 USDR as the collateral. So they were collateralizing the stable with their own stable. So you start to see the problem here.
Look, this works in the real world because you believe in the faith. I mean, if you look at a fiat currency, it says you believe in faith of the U.S. government or whatever respective government. It doesn't work on chain, folks. Like, you can't fabricate trust on chain out of thin air. You need to have real collateral backed by some form of demand. Now, you could think demand in block space is real. There's people who want to. There's competition there. Whether you believe it to be valuable or not, that's your particular opinion, but the market says it's valuable at any given point in time. So it's backed by something. There's compute in a proof of work system, proof of stake, and then, there is valuable currency there, but just using your own coin as collateral, folks, please don't do it. It doesn't work. It will fail. Thank you. That's all I have to say. People should go to the Stablecoin podcast we just recorded last week with Nick and this other gentleman. What is it? Martin? I'm blanking on the name.
With Martin.
Anyways.
Yeah, with Martin.
Yeah. Yeah. So anyways, it's even though it's crazy that you just said like 40 million is not a lot, but like, I still think that's a lot. Like we, as an industry, I think it's not so much the quantum, although some of these hacks are and losses are pretty, real. It's more so like just from a, like, why do we keep doing this?
Yeah.
we ought to move on and just like, so anyways, it's a bit discouraging, I think,
Yeah.
just to see
I
these
do
kind of
think that there
failures.
are more stable coins coming. I do think we'll see a lot more stable
Yeah,
coins
yeah.
coming in 2024. And I think a lot of people are going to make the mistake of calling them saying, hey, look, this is just like, Terra Luna, basically, but they will be
Yeah,
better.
look, in that episode, I asked Nick, "Hey, if you were to wave a wand, how would you design a better stablecoin?" You know what I mean? Like, um,
Yeah.
algorithmics, I think, are out off the table. I think, you know, you could argue all you want, but I think time and time again, and even in the blockchain capital episode, we talk about these things that just don't work. Um, and so, yeah, I think I do agree with you. The design space and the category itself, stablecoins, is going to be huge. I think there is an opportunity to build better versions of existing stablecoins or complementary versions of existing stablecoins, just from a diversity standpoint, resiliency standpoint. Like, why couldn't there be another consortium backed by major banks or whatever that do a similar USDC version? Like PayPal's doing it. Well, Paxos whitelists their stablecoin solutions. Like, I think we could credibly see multiple flavors of a fully backed stablecoin. Like, whether you like that or not, because it's not censorship resistant, then well, you might have other options, but you're taking different kind of risks, right? So,
Yeah.
um, yeah, but I think it's important to be vigilant around certain experiments and faulty kind of economic or financial assumptions of mechanisms that just don't really work on chain.
Yeah. Yeah. Last but not least, man, Scroll. Scroll launched mainnet this week. It
Mhm.
seemed like kind of a soft launch. I don't know if if the news like leaked or I was it didn't
They
seem like a full
intimated around it
blown.
on Twitter. Yeah, I think they were sensitive around everything that's going on, obviously, in the world.
Right.
So I think, but yeah, they did kind of launch mainnet of sorts, which is
Yeah.
encouraging. This is a team that we were, I think, one of the first, if not the first, to have them on the pod. I mean, of course, I'm a seed investor there, and and I know Sandy and the rest of the team there. So, but we had them on very, very early on. People should go and listen to that podcast. But to me, it's really to be fair. Like, it wasn't as obvious back then for me, and I think I will give credit to Folius, Jason, who's a good friend, and I invested in his fund, and he was the one who's based out there in China. And so, my thesis was, I'm not going to be the one to be able to identify these teams. Clearly, there's talent. Statistically, like, there ought to be really high, really, really quality teams that are going to build and continue to build out there. Um, and that was, he brought that deal to me, and so that was yeah, I'll give him credit for that. I mean, obviously, a long way to go still. I think Zk EVMs are very ambitious proposition, and really encouraging, but works. And I think these guys are doing really good work. So yeah, go listen to the podcast that we recorded with Sandy way back. I think it was over a year ago, right?
Yeah. Early. Cool, man. We
Yeah.
can keep it light this week. Quick 30-minute app. Anything
Yeah.
else
Well,
that's on your mind?
no, I'm just thinking of, well, as we always like to wrap episodes, of things you're reading or watching. I have recommendations for both reading and watching, because
All right, hit me.
but I want to ask you first.
I'm watching David Beckham documentary on
Oh,
Netflix.
gosh. Why are you stealing my
Is that
thunder?
was that
That
yours?
was gonna be, I did
Dude,
watch it all. I mean, David Beckham was like it was a hero of mine. I would wake up uh early Saturday and Sundays, like 6 a.m. to watch English Premier League games, specifically Man U. Like, oh God, like that team, like, amazing. I have fond memories. But to be fair, I didn't know a lot of the things in the documentary were like eye opening to me. The fact that he was like vilified when he like got a red card during a World Cup match. I think that I did not know the level of, he got a lot of shit from, and months at a time. And then, like, the English fans were just had no mercy. But fascinating. I love these type of documentaries. Really, really
yeah.
good. That was
So,
mine as well. Yes.
so I saw the Tiger one maybe a year and a half ago. Then Serena and Venus semi
Okay.
recently, and then David Beckham. I'm convinced now to have an athlete at this level, you need a parent who is an absolute nut. Like that's been one of my takeaways from this is
Yeah.
like
You think
like
David's dad was like
David's dad is
a
a
nut?
nut. He goes the interviewer goes, would you punch your dad in the face if you had the opportunity? And David goes, "No, because he'd punch me back in the face harder." Like, he that was all he thought about. He didn't have friends as a kid, like, he was just soccer, and that got drilled and his dad was just a Man U guy and was like, "My kid will play for Man U." So, I think
Yeah.
he
I didn't think it was portrayed as like that much of a obsessive parent. I mean, maybe he
it's not
was,
like
right? Maybe
Tiger's
there was some.
parents or Serena and Venus's
I think
dad, but
there's like levels of that, right? Like I've heard Max Verstappen, the Formula One driver who just won the championship again this year, three times in a row. That his dad, also a Formula One driver, not as successful, was incredibly harsh. There's a story where he left him behind in a gas station after a race because he didn't come first as a 12-year-old or whatever. I mean, you got to think that that traumatized the kid up to this day.
oh,
Like
yeah.
he's probably thinking every race if he doesn't win, that. Anyways, I didn't think it was that. I mean, of course, the dad is passionate, as a lot of Brits are around football, but yeah, it was certainly yeah.
So what are you reading?
There's this great book. I have it open here in my Kindle. It's by Rick Rubin called The Creative Act.
Ah,
Hold
yeah,
on.
I've heard of that.
Rick Rubin, The Creative Act, A Way of Being. And it's sort of, I think he's an artist, and it's sort of like a contemporary version of Meditations by Marcus Aurelius. It's just
You don't
very
you don't know
short,
Rick Rubin?
almost like haiku like, poem like, but it just really really refreshing, actually.
Yeah. Yeah, he's a legend. He's worked with all the greats.
Yeah. Yeah, yeah.
Big music
I don't know
producer.
much about him, but yeah.
He's this music producer who's basically figured out a way to, like, get the best out of all the Kanyes and the Biebers of the world. So, that's his
Mm.
claim to fame. I have a fun fact for you. ACT scores just hit their lowest level in 32 years, and I think we're just starting to if you look at the chart of ACT scores, it's just, like it's kinda flat or up for,
Wow.
like, last 40 years, and then it just falls off a cliff last couple of
What's it
years,
at
and I
now? Like
think
20. The top score is what, 30? If I remember, 35?
his top score is 36.
36, yeah.
Um, the average used to be it was 20 and a half. It looks like in 1990, then went up to 21 in
Oh, so like
2000. Then in
19 now, huh?
2010, it went up to 21 and a half. Now it's down to 19 and a half.
Good lord.
Yeah. So I think you're starting to see the ramifications of COVID on students, which is a real bummer. COVID plus everyone being addicted to TikTok.
I mean, that's just in the US, right? Because I think it's more of a
That's the
reflection on,
US.
there's some really interesting studies around. The US actually ranks very low, and has been for a while, on these like standardized tests for even younger kids at the elementary level and middle school, like primary level. They score very poorly. I think the lowest among developed countries, OECD countries. The highest are like, I think, Finland and Sweden. I think Finland is number one. There's a fascinating documentary by Michael Moore that I think it's Word Invade Next, that he goes deep into this, and goes to these like schools in Scandinavia to understand how radically different their system is. It begs the question, like the U.S. And again, I don't want to go again in this topic, but like across healthcare, if you plot it, number of expenditures, but outcomes are terrible. Like on the research side, on the innovation side, fantastic, bar none, number one in the world. Maybe Israel, per capita, but like the U.S. is still leading in terms of innovation, but in terms of outcomes, the amount of expenditure per life, per capita, and the life expectancy has just gone down in the U.S.
Mm.
That's not true for other countries. This is a huge outlier in a negative way in education, and so it's clearly it's like it's not a spend question. It's really just rethinking. Hey, systemically, clearly something's going wrong here.
Yeah.
So yeah, and then of course you see, I'm not surprised actually ACT scores gone down. Like, I mean, it's kind of a joke. These standard, like the SAT and the ACTs, basically, another great documentary about these parents that like, there's this guy talk about fraudsters like SBF, like this guy that goes around and like promises kids that they're gonna, they can pay their way into these like top schools. Um, but yeah, I mean, I went to Harvard summer school when I was like in middle school or high school, I guess. And one of the biggest realizations for me was like, obviously you go to like, it's Harvard, right? It's like, oh my God, like, right. And then you're like, it was just like really interesting for me because, and then you go to like, I think it's, if you have the chance, it is very, um, kind of like eye opening to put yourself in the most competitive of environments. Now, I'm not saying Harvard is the most competitive, but like you can think it's elite, right? It's like in your mind, it's like if you go to like JPMorgan or like Wall Street. Well, the finance environment, if you want to go to the most competitive, we'll go to New York, right? I think it's just a different level and category. And I think it's
Right.
really nice if you have the opportunity to put yourself in like your feet in the fire and say, okay, what is the most competitive environment? And it can be daunting. Like there's all these stories. Like there's a great book of Malcolm Gladwell of What the Dog Saw, of like how these students like they're at the top of their class in high school and then they go to Harvard or like an Ivy League and then they're the worst, right? Because you put the and so like and small fish in a big pond or big fish in a small pond. What would you prefer? What I'm trying to say is like I think I would always like want to at least understand what does the most competitive environment look like to then say, okay, at least I know what it looks like. But some people deprive themselves of even like going there. And then, of course, the last thing I'll say is you hear stories of Harvard student associations, which are just no accountability and just say, oh, we couldn't read a statement. I'm like, well, yeah. What's your ACT score? I don't care. I don't care if it was 36. There's no accountability and ownership. Like, what are you teaching these kids? So the last movie I'll recommend. I'm cheating here. But just like bonus content, bonus content. The last, probably the best scene of all time, Scent of a Woman, Al Pacino, when he's defending Charlie. Uh, fantastic. Fantastic scene. People should go watch that movie because it's so relevant to what I think is happening in today's society. What are we valuing? What are we teaching our kids? Like what values? I think that movie is just hits a soft spot. To me, it's just one of the best movies of all time. So, anyways, guys, you came here for crypto, and we're giving you like half non-crypto content. Don't kill us.
They're like,
We'll
are
be
they
back
ever
to
getting
regular
back to
programming.
crypto conversation? No? All right.
We're just gonna stop talking about crypto because it's just like so boring. No, I'm kidding. We love crypto here. We'll keep talking about crypto, but every
Good
once
old
in a
bear
while.
market roundup pod, Santi.
We
I'm
haven't
almost
even.
sick as a
Can
dog.
we
I'm all
go? Can we
congested.
go an
I'm like,
entire
I barely
pod
talk.
without saying the word? Oh, hold on. A challenge. Can we go an entire pod without saying bear market? That is the challenge. And whoever says it from now on will be like the swear jar. And if you say bear market, every time you say bear market, like you're gonna have to shave your head or something, which you haven't clearly. So, anyways, I'm just gonna
I told Brian.
mic
I said,
drop.
Brian, you come on the pod. I'm shaving my head. So
It's like saying, "Yeah, I'm gonna do this if the president shows up to the pod." I mean, come on, man. Like, be realistic here. You need to
you
shave your
think
head. You've
Brian
lost the
coming
bet.
on? No, Brian said he's coming on the pod a bunch.
He's El
Please,
Presidente of crypto, man. In my book.
El Presidente. All right, Brian, if you hear this, join us, my friend.
Brian, come on the pod. We want to hear from you.
All right, I'm
Thank
too
you.
congested to keep going with this pod. I got to get some tea or something.
Yeah, I think that's our time. That's our cue. All right, everyone. Thanks for listening. Short roundup here. If you have anything that we didn't talk about, you want us to talk about, drop us a comment, tweet at us, and we'll try to cover it next week. And of course, hopefully, we'll have Casey back on to talk about more of the stuff that's happening in the Sound District of New York.
See you, folks.
Have a good weekend, everyone.